Hello everyone, this is Univer. On Wednesday, July 24th, the U.S. stock market experienced a significant downturn as technology giants Tesla and Google reported earnings that fell short of expectations. Disappointed investors exited the market, leading to a sharp decline in tech stocks and dragging down the major U.S. indices. The Nasdaq and Nasdaq 100, which are heavily weighted with tech stocks, both fell by nearly 3.6%. Marking the largest intraday drop since December 2022. The S&P 500 index dropped over 2.2%, the Dow Jones Industrial Average declined by more than 1.1%, and the Russell 2000 Small Cap Index fell by over 1.7%. The Philadelphia Semiconductor Index also saw a significant decline of over 5%, with notable drops in stocks such as Nvidia, which fell by 7%, and AMD, which decreased by around 10%. This situation has also had a notable impact on the Asian markets. Following the sharp decline in U.S. tech stocks, Asian stock markets opened on Thursday with a similar downward trend. Markets that are heavily invested in technology, such as Japan and South Korea, were particularly affected, with investors' confidence in tech stocks shaken and an increase in market volatility. Traders are now focusing on economic data, fully pricing in a rate cut for September, and noting the increased demand for gold in India, which has supported gold prices for 2 consecutive days. Both the dollar and U.S. Treasury yields have fallen, further boosting precious metal prices. COMEX August gold futures rose slightly by 0.6% to 2,408.7 per ounce, breaking a 4-day losing streak, while COMEX September silver futures fell by 0.53% to 29.75 per ounce. Spot gold maintained its upward trend throughout the day, surging before the U.S. market opened and reaching a daily high during early trading, gaining over 0.9% and surpassing $2,430 per ounce. However, it later gave up most of its gains, nearing the $2,400 per ounce mark by the close of the U.S. market, finishing with a slight increase. Spot silver also saw gains before the U.S. market opened, but then plummeted, ending the day with a decline of over 0.9%, and falling below $29 per ounce. Analysts have pointed out that the most significant positive factor for gold prices currently is the prospect of rate cuts. The market is focused on this week's economic data and strongly believes that the Federal Reserve will start cutting rates this year, which has weakened the dollar and supported higher gold prices. Additionally, India's decision to cut import duties on gold and silver from 15% to 6% is expected to increase demand for these metals, further supporting gold prices. In the London industrial metals market, basic metals continued to decline over several days. Copper, often seen as an economic indicator, fell by $62 to $9,104 per ton. Zinc dropped by $4 to $2,685 per ton. Lead decreased by $16 to $2,044 per ton. Nickel fell by $194, a decline of 1.21% to $1,527 per ton. However, tin rose by $372, an increase of over 1.26% to $29,790 per ton, and aluminum rose by $6 to $2,300 per ton. The decline in U.S. stocks has had a ripple effect on global markets, particularly in Asia. Investors need to keep a close watch on market movements in the coming days to make the best investment decisions. If you enjoy my channel, please like, subscribe, and hit the notification bell. Thank you for your support, and see you next time.